The White House is now talking about declaring a national housing emergency. It sounds dramatic, it grabs headlines, but will it actually do anything to make homes more affordable? That's exactly what we're breaking down today.
So let's start, Jeb, with what we know, which isn't a whole lot. What we know is Treasury Secretary Scott Bessent started with saying everything is on the table. So that's a pretty wide range of outcomes and options. So everything is on the table.
That means nothing is not on the table.
Nothing is not on the table. So we're trying to figure out what we can do, and we don't want to step into the business of states, counties, and municipal governments. So
it must be a big table.
It's a big table, and a lot of this is more state related. So what does a national housing emergency look like? What is it? Why are we even talking about it? So you're here, you're watching or listening to the Educated Homebuyer podcast. You are likely wanting to buy a home. You already know. So the median sales price of an existing single family home was $297,000 in June of 2020. It's $441,000 now. So a 50% increase in 5 years. That's something of an emergency. You could argue that houses were probably a little undervalued prior to then, and they're definitely on the high end of affordability right now. So buyers in nearly half of the 390 markets around the U.S., metro statistical areas in the U.S., need a six-figure income to qualify. So that's where this is coming from. Why would a politician want to address this? Because it is a problem for more than 50% of Americans, probably 70%, somewhere in that range. Homeownership, we've talked about a million times, is over 60%. So the 60% of people who do own homes, they're the in crowd. The people that are on the outside want to get in, especially younger Americans who don't own because they weren't of an appropriate age to qualify, want to get in. So there's a large segment of the voting public who is not happy with the housing situation. And even those, I mean, again, we talk about home buying. For renters, it's not all that different situation. Rents are very high, and housing is not affordable. So let's talk about what a national emergency actually is before we talk about maybe what some of the proposals of all of the things that are on the table. So it's declaring a crisis a national emergency, allows presidents to take actions that would normally require congressional approval. So like executive actions, which for the last 25 years, we've had this increasing trajectory of executive actions because it is hard to get things through Congress, a divided Congress. Presidents have just said, hey, I'm going to take my pen and I'll write an executive action. So it accomplishes something very quick in the short term, but in the long run, when the other party wins the next election, it just gets reversed. We throw that in the trash, we go another direction. So it's not an effective way of long-term governance. So this is a little bit different. The emergency powers come from saying there is truly and legitimately an emergency here affecting the public. And most people of all stripes would probably not disagree with that housing is essential to families, and it is a crisis due to the lack of affordability for those that are renting or didn't buy prior to the pandemic. So according to the Brennan Center for Justice, instituting an emergency grants presidents access to a wide range of special powers. And when have we seen this used in the past? George W. Bush after 9/11 to increase military readiness and security controls, and then the one fresh in everyone's mind, COVID. We declared a national emergency, and the government got to do all sorts of things that they wouldn't normally have been able to do.
All right, but that's it. You're just stopping there, not going any further.
That's it, and that's all. No, but the takeaway there is that emergency powers can be really sweeping. They can do anything. But does that mean that they're effective? Does it mean that it solves the problem? So that is really the crux of the question there, and what we're going to talk about today.
Well, I think, typically when you have a president or any politician running for office, right, they promise a lot of things, a lot of times around housing, to help first-time home buyers. There's this whole affordability thing. What we're going to do is we're going to increase federal land. We're going to do all of these different things to make housing more affordable. And then when you get in office, there's obviously a parade of other things that come to the table and things that they need to handle. Now we're getting midterm. People are thinking about re-election. Obviously, Trump can't be there, but his nice vice president can be. And so they're starting to think, how can we position ourselves, right? Probably for re-election. Housing is a one of the legs on the stool that's extremely important. And now those things that were conversations prior to getting elected are now starting to come back in the mix, Josh. And so I think it's important to kind of talk about some of those. When we talk about them getting elected, a lot of times we say, this stuff they're promising isn't realistic. It's not going to help. The the chances of them actually getting it through and approved are very, very low. The national emergency allows some of these things now to come back to this big table that we're talking about and potentially happen. So I think maybe let's talk about those in a little bit more detail. What can they actually effectively do? And will it actually have an impact on the market at all? Is it going to help first-time home buyers?
Let's start by underlining the biggest reality here that's going to be problematic. Most housing policy in terms of increasing supply, which is the biggest issue. If we had more supply relative to a fixed demand, prices would be more reasonable. So most of that policy comes down to the state level. And let's use an egregious example. You and I are residents of the state of California. Our king here in the state of California has appointed himself as the head of the resistance to Trump. So regardless of whether the policies are good, bad, or indifferent, if Trump says, hey, we're going to give free $1 million to everyone, our governor here would say, that's a terrible idea. We're not going to do that. If Trump says we're giving no one any money, he will try to find a way to give them $1 million. So it doesn't have anything to do with policy, whether it's effective, whether it's good. So in California, we have some of the most restrictive building and zoning laws there are. At the same time, we have politicians in Sacramento who are forcing mass building of affordable housing on cities throughout the state if they want to get any funding from the state. So it takes very long timelines to get things approved. The bureaucratic red tape, what's the number, Jeb? It's $100,000, $95,000 before you even put a shovel in the ground to build a house. So we have other states in the country that would not be part of the resistance to Trump, such as Texas and Florida, where they build a lot of housing quicker, more affordably, lower permitting costs, and they have lower housing costs. And there are other reasons for that. I mean, Southern California coastal real estate is always going to be really expensive, and it's going to bring those prices up. We can't blame that on Newsom. But there are other underlying issues. So the biggest problem with any federal housing emergency here is the most expensive states where housing is least affordable have decided that anything done at the federal level, not through Congress, done by an executive order or done by emergency powers, they will fight through the court. They will fight, even if they agreed it was the right thing. If it was their idea and Trump decided to implement it, they would take him to court and say, you cannot implement our idea because you're an idiot. So from that perspective, we're going to have, if they came up with the greatest ideas, which we're going to go through the ideas that they have thrown out on the table and why they're good, bad, indifferent, but there's just going to have this resistance, and the resistance goes through the courts. So this is not big picture. If we wanted to stop the episode right now, nothing that is going to be planned or implemented is going to help someone in the housing market in the next 1 to 3 years. There's my bold take. That's my hot take for today.
Well, I disagree with that because there is something in there that I truly believe could have an impact, and we're going to talk about it. But I think in layman terms, what you're saying is that whatever Trump does national housing emergency wise, it comes down to state and local laws and levels where they don't necessarily have to implement what's being passed at that federal level, right? It comes down to say, hey, listen, yeah, that's a great idea for Texas and Florida and all these other states, but here in California, we don't do it that way. We do it this way. And we've got some crazy ways of doing things. And so, just because some of these things come out doesn't necessarily mean it's going to impact you directly. But with that, let's talk about some of those things that are potentially being proposed, Josh. We've got there's a lot of things here. All hands on deck is essentially what's happening. But you got the lowering of closing costs for buyers, and I think let's kind of list these things and then go through them and see how the impact could actually play out. We got possible federal involvement in building standards, streamlined permitting and zoning overrides, executive actions to cut through the red tape, auctioning federal land for housing development. And then you got tax considerations, the possibility of eliminating or greatly expanding the capital gains exemption on the sale of a primary home, which could encourage more existing homeowners to list and free up inventory. So of those things we listed, Josh, I'll be the first to tell you, I think the last one I listed has the biggest potential of happening within a shorter time frame and could have a big impact on inventory.
Well, let's start there and remember to frame it in the context of today's discussion. What are we talking about? The declaring of potential national housing emergency and using those emergency powers to push something through. I don't think that's needed. So we have one of our most extreme members of Congress, Marjorie Taylor Greene, has proposed eliminating it. I believe her proposal is to eliminate it. Some of the more reasonable proposals are if this had been indexed for inflation when it was originally created in the late 90s, it was $500,000.
Well, explain what you're talking about.
So the when you go to sell your home, and this is funny, we've talked about this a million times on the show, because prior to 1997, when this was changed, what would happen when you sell your home, if you make $250,000, as long as you buy another home and put that $250,000 in it, you're not going to be taxed. It was meant to keep equity rolling over in homes and building financial security. So we looked at it at that time. So that's pretty restrictive. Let's set up a new system where a single person can make up to $250,000 on the sale of their principal residence, defined as a home they've lived in as their primary residence for 2 out of the last 5 years. They can take up to $250,000 of capital gains tax-free. Married couple, $500,000. That was a lot of money then. An average home was like $120,000 at that time. So a married couple could be 4 times the national average of home and have it as 100% profit and pay no taxes on it. If we had indexed that for inflation for a married couple, that would be $1 million today. So if we were to do that, I should have pulled the numbers so we could quote them for you here today, but it is an extreme number of older buyers who have built up in excess of the 250 or the 500 for a single or a married person. And many of them are choosing not to sell their homes when they would like to move to another state, be closer to grandkids, downsize, get something more age appropriate for them, but they're not freeing up this inventory and moving because they don't want to pay additional taxes. Because what happens, Jeb, is once you die, your heirs are going to get that at a stepped up basis, and that taxes go away entirely. So it's not an issue of saying, hey, we're doing something that's going to screw the government out of something. The way the tax system sets up right now is there's an incentive to die in your home to make the taxes go away. If we give them an incentive to take the taxes away, that would absolutely free up supply. And we've talked about this. More supply is the key to greater affordability. And from that perspective, this doesn't need an emergency. This is pretty much bipartisan support. What did we have bipartisan support in the most recent tax bill was that Republicans and Democrats, especially in high tax states, were in support of expanding the state and local tax exemption. Well, almost everyone is in support of this also because their senior constituents, Republicans and Democrats, who vote in the highest amounts, who give the most to political parties, who help these people get reelected, are saying, hey, this impacts me. I would like a greater exemption. So I don't think we need a special emergency.
But he can take credit for it if he does.
He could take credit for it. But again, the next president could come in and go, Trump was stupid. That's gone. So our best hope would be that the politicians would go, hey, this is an easy win for us. Red, blue, in between. Everyone is pretty much in favor of this. I don't know. I'm sure we will find someone in the comments who will make an argument for why this is the worst idea in the history of the world. But about 99% of Americans,
if you own a home, you're on board. I mean, it's that simple.
Yeah. If this feels overwhelming to you, you're not alone. Let's talk through your numbers so you can see exactly where you stand. If you need help with your financing or connecting with an expert realtor wherever you are, use the link in the description below to connect with us and get the help you need.
But let's talk about another one. So we've kind of talked about the potential of a capital gains exemption removal, an expansion of it. But let's talk about auctioning of federal land, right? So this is something that Trump was going through office or running for his second term, was something that he was talking about, proposing potentially. Ed Pinto, a friend of the show, been on here talking about also the potential of opening up some of this federal land to build more housing. And, that is something, Josh, that you and I had a conversation about prior to coming on here, again, could have an impact. States like California, counties, depending on where you are, less of an impact, but there's a lot of the United States that could benefit from some sort of auctioning off land, opening up land, however you get there.
They're saying there's enough land to build 3 million additional homes. And we're not talking far-flung, far-out land. So Trump had proposed this while he was campaigning. Most people look at it and go, hey, that's a really good idea. We're not talking about, the meadows in Yosemite that the government owns and auctioning this off. We're talking about land that is adjacent to areas like Vegas, like Phoenix, that need more housing and people want to live there. So if we open this up and make it reasonably affordable to developers and expedite the permitting and planning process where they could get these homes to market fairly quickly, bring additional supply, that would go a long ways towards keeping housing costs down in those areas. So this is a great idea. The funny part, Jeb, as soon as he got elected and started going through the correct processes to do this, massive resistance. It's Trump's idea, so it's got to be terrible. And everything that you read was like, oh, the Sierra Club says we're going to kill fish, we're going to endanger. Like, we're not, like, if you saw the map, it was one of the most egregious examples of political posturing I've ever seen, because the areas that they are proposing, we're not talking about national parks. We're not talking about environmentally sensitive areas. The government has far more land than it can use effectively, and this is the highest and best use. In real estate valuation, that is one of the primary principles for what is this worth? What is the highest and best use of this land? This is land that is not being used, and its highest and best use would be to build extra homes for people like you that will help keep home prices down and make things more affordable.
No, and you mentioned something there that's also kind of on the table, and that's the permitting and the changing of zoning, the red tape type thing, like overriding some of this stuff where, again, you come to a state like California, it's very difficult to build a home. I mean, you take like Malibu, I mean, not Malibu, well, I guess parts of Malibu, but the Pacific Palisades, that caught on fire last year, right? One of the biggest issues with that whole area in rebuilding is dealing with the Coastal Commission, dealing with, the county of LA and going through the building process. And, again, the idea is like, hey, listen, you can do this a lot quicker if you streamline this process. Don't make it so difficult. Don't make it so expensive. And the potential of zoning laws. Now, the zoning thing, depending on where you are, it's kind of one of those NIMBY things, not in my backyard. And there's some resistance to it. But when it comes from the federal level and says, hey, listen, this is kind of a blanket statement, does that have the potential to free up inventory, add inventory, create a more streamlined process?
Well, just think about it. We said it's almost $100,000 before you put a shovel in the ground in California. If we can shorten the timelines, decrease the costs to $70,000, that's a real difference to the consumer. Now, the issue is, we'll get people in the comments, and they will actually be right in this situation. Well, if you reduce it $30,000, those builders are just going to put $30,000 in their pocket. That is 100% correct if there is a limited supply. So the market, the impacts of supply and demand, will tell you what that end price is. In other areas where there's sufficient supply now, if you decrease the costs, that will have to get passed on to the consumer. But if magically in Los Angeles County we can build 10,000 more homes and it's $30,000 less per lot, the builders are going to put that money right in their pocket. So there's some limitations, but in many areas where the supply and demand is more in balance, that would be helpful. So I think it could happen. It's very hard to see that happening at the federal level. Probably an example that we want to use here is Trump basically said all of the solar mandates, go piss in the wind. You can't do that anymore. One of the things that leads to the higher cost of housing in California is a builder cannot build a home without putting solar in. So that gets passed along to the buyer, and the buyer has to pay more for the home. So a lot of buyers want solar and would do it anyways. And depending on where you're at, it can be economically beneficial. But other areas, I've done the math. For me in my house, it's 10 plus years before you even break even under the best assumptions. So when you look at this, little things that start with the best of intentions, but more government intervention is not a positive. And California is the best example of that. I don't know. I want to say there's never been a politician that said, hey, I have this terrible idea that I don't even think is good or going to be helpful, but I just like it, or it's for my buddy. Let me ram this through. It all starts with a grain of good. The idea of saying, hey, solar is cleaner than other forms of energy. It will lower energy costs. It helps the grid, all of those things. But it has a very real consequence of increasing the cost of housing. And the same politicians who supported that policy of forcing everyone in California to have solar on their new home also say, well, now we got to do stuff to keep the housing costs down. Well, there's unintended consequences of every action, no matter how good your initial intentions are, and even if you accomplish that. So this is the problem we've gotten to in 100 years of developed development of every state, they pass laws. Something goes wrong, or someone has a pet project, something that they want to incentivize, and now we have so many laws and regulations that it takes longer. It's more. Could it be streamlined? Could it be improved? It absolutely could. With gridlock politics throughout the United States, even within states. A national emergency may be necessary to make it happen, but how you push that down to the states is above my pay grade, and I'm dubious that it would happen.
For all of you watching right now, thank you for the continued support. The show continues to grow because you guys show up every single week. You leave comments, you like, you subscribe, you tell your friends about us, and for that, we are grateful. So with that being said, if you're finding any value today, make sure you do hit that thumbs up. Consider subscribing if you haven't done so already, and make sure you share us with your friends. Well, that one, I mean, that and the next one we're talking about here kind of in my head feels similar. Like it sounds great in action. I just don't know how it actually happens. And that's the lowering of closing costs for buyers. A lot of the closing costs are locally, I don't know what the right word is. Like it comes from local agencies and what have you. Like a lot of the closing, it's not at a federal level. This stuff, right? It's state, it's county, it's city. So the idea of lowering closing costs, it's a fantastic idea. I'm not sure how much that truly helps the home buyer out there, but a lot of the closing costs you see, when people are paying 4 or 5% in closing costs, it's not the local stuff that's the big part of that. It's lenders ripping people off, in my opinion, and charging people way too much money. So could it be regulated to some degree?
You can't say it's lenders ripping people off when we're talking about the average of closing costs. Are there lenders out there that do that? And we see crazy stuff all the time. Someone's got $18,000 of box A fees, and you're like, that's insane. But what we're talking about is on average. So let's kind of roll through it, because there's kind of three areas here. Could this be done? This can be done. Is it going to have a big impact? I don't think so. If you say that the average down payment right now is about 7% for a first-time buyer, so lots of 3.5%, VA 0%, the average is about 7%. So if we say closing costs are 2 to 5%. And I just had this conversation with a gentleman looking to buy in, I was either New Jersey or Pennsylvania yesterday. So the Northeast has very high closing costs. They have a lot of taxes. So again, the government decides, hey, you want to buy a house? We're going to tax you to buy a house. Hey, you want to refinance your loan and get a lower payment? We're going to tax you so we get some of the savings. Like, this is the insanity of it. We're fighting against ourselves. We want to help the people that live in our state. We want to incentivize people to live in our state.
But we want to get paid.
Good for you to do, we want you to pay us for doing them. It's a little bit bonkers. But anyways, that state is also a high title insurance cost state. So we look at it and I said, you could easily be at 4% by the time we're done with this. Compare that to California, where title insurance is pretty reasonable. On a purchase, the seller is going to pay a little transfer tax, a reasonable transfer tax. Buyer could pay it, but generally doesn't. Most of the time I tell people you're looking at about 2%. You buy $1 million house, it's $20,000. You buy a $500,000 condo, it's $10,000. So we're somewhere between 2 and 4 is what most people are paying. And we're saying the down payment is 7%. Closing costs are a lesser portion of this. That doesn't mean that we couldn't or shouldn't or wouldn't want to reduce them. But let's talk about box A fees. I started doing this in 1995. There was no box A, there was no loan estimate then. But the lender fees that go in there that you may see as an underwriting fee, a doc fee, a processing fee, those were about $695, all in, fully loaded in 1995. As recently as, let's say, pre-COVID, 2017, 2018, it would be $1,400, $1,500. And you may say, hey, my lender didn't charge them. I had nothing in box A. It just means that in their rate that they're offering you, they have built into their model that they have to pay those things. So post-COVID, I've seen a couple of lenders here in the last few days. They increased their admin fee, which includes underwriting and docs, to about $1,295, and most processing is up in that $695 to $995 range. So you're talking $1,800 to $2,000. So it's tripled in the last 30 years when I've been doing loans. And you look at it and go, that's crazy. Well, you look at the rate of inflation, it's kind of just kept pace with the rate of inflation. And why is that? People do those jobs. Someone does your loan docs. Someone underwrites your loan. Someone processes your loan. Those people need to get paid. They need to pay their bills. So do we have relief there? Maybe if we can automate a lot of this and reduce some jobs, but there's some problems with that, right? If you can make it less human dependent, you can decrease box A. But that trend is it's going to keep pace with inflation over the long haul. Now we have in box B, the big one here that we've talked about is credit reports. Just post COVID, credit reports have tripled. So in the last 5 years, we talk about home prices up 50%. People are like, that's nuts. Well, the cost of a credit report has tripled. We went from $35 to $105. So let's say we can roll it back. You guys are bonkers. You can't charge a dime more. It's $35 tomorrow for credit reports. We just saved you $70 in a transaction that's going to be $15 to $35, $40,000 for a first-time buyer. So that doesn't make a difference. I mean, and even if you could cut 20% off a box 8, we're talking $400. So maybe we just saved you $500. And I understand every bit counts. The only area where I see you could have meaningful reform, and the FHFA through Fannie and Freddie is trying to do this. They're creating alternatives for title insurance. I don't want to say title insurance is a scam. If you've ever had a title insurance claim, which I have, it would have cost me $50,000 out of pocket to fix what my title insurance covered. But that title insurance premium on that was probably $700 or $800 for me and $1,200 or $1,400 for the seller. So they got a $2,000 premium. They paid out $50,000. For anyone in the mortgage or real estate business, you know those are incredibly rare. It is the least likely insurance ever to pay off in the form of a claim. So the majority of that premium goes to commissions to the person that goes out and sells the insurance or the mortgage person on using that. So there's a lot of fat to wring out of that. For that example in Pennsylvania yesterday, I think we were looking at like a $2,800, it might have been New Jersey, a $2,800 title insurance policy. In California, it would have been $900. So it's the same stuff. And I'm sure someone in the title industry could explain to us why that is besides just state differences. But
if you can, let us know in the comments.
Throw it out there because this is not an area of expertise. There has to be reasons for the regional differences in prices. But all of them, when we look at the actual cost of insuring this plus a reasonable profit for the insurance company, those premiums should be much, much lower. But again, what are we talking about? Save them $500, $1,000 in a transaction?
Maybe they're still using the Dewey Decimal System to file it.
Could be.
They're not using computers, and therefore it just takes more time.
It truly could be. It goes back to the manual cost of researching the title, because in California, we talk good things and bad things about California. We have very good data systems, and researching the title on any one property is a very fast and easy process. So we get the results faster with less labor. So you're right. It could just be areas that don't have the same technology infrastructure in place, and it's just more expensive to do the research to properly insure a property. But if you know, tell us in the comments.
Yeah, no, for sure. So, I mean, at the end of the day, emergency actions, emergency, whatever, national housing emergency, could it impact? It could. Is it likely going to make things extremely more affordable? Probably not. Could it help? It definitely could. But like you said, Josh, if you're in the market to buy a house the next 2 to 3 years, chances are you're not going to see any of this stuff. You could see some more inventory free up because of some of these policies actually getting enacted. But even then, I think, we've discussed home prices are in a position now where they're probably, more stabilized than anything else. So you got some sideways movement in home prices in most markets out there, which means, hey, more options for buyers, positive things, but not necessarily buying anything, a lot less expensive. The biggest factor that could allow housing to become more affordable is mortgage rates. We've talked about it time and time again. We know even through a national emergency, Trump doesn't have the power to tell the Fed to lower the rates. Last week's episode, we discussed how Trump could have an impact on rates, but at the end of the day, it's not going to take a national housing emergency to do it. It's more of it working kind of in the back door there, if you will. And even that doesn't seem reasonable at this point.
And there is a loud and vocal minority of folks who love showing up in the comments and saying, you two are idiots. Interest rates have nothing to do with it.
We are idiots.
Homes are too expensive. So it goes back to what we're talking about, that this is a supply issue. So this should be a bipartisan problem with a bipartisan solution, that we're auctioning off federal land that is reasonable and acceptable, and highest and best use would be for additional supply of housing, which would help prices. If not outright drop, it would help them stabilize. I think I can speak for you, are hopeful and believe that we're headed for an extended period of time of below trend appreciation. But if we had zero appreciation for the next 10 years, it kind of gets things back to where affordability is. But the only way we get there is additional supply. So all of the things that we've talked about, streamlining permitting and zoning, opening up additional land for development, everything that can be done along those lines. I just don't know that a housing emergency is the right way of doing it, because it circumvents Congress. So if you're the type, like my grandmother, who loves writing her congressman or senator, let them know. Let them know that this is impacting you and you are in favor of these things. A lot of people are jaded and don't think the political system works. But guess what? The people in Washington, D.C. want to get reelected. So if they hear, hey, this is what's important to me to get my vote, we can affect change over the long haul. So most importantly, as we always talk about here, Jeb, control what you can control, stay within yourself, make the best decisions for you and your family, and do what you.
And if you found any value today, make sure you hit the thumbs up. Consider subscribing to the channel if you haven't already. And if you know somebody that's considering buying a house, there's a high likelihood they don't know about the Educated Home Buyer. Do us a favor, share it with them. Your most impactful video, something that you found value in. Help them become part of the team here. We would appreciate that. That's how the show grows, and that's how we continue to educate, empower, and help people buy right, borrow smart, and build wealth. So until next time, adios,
amigos.